Anyways, over here, right, we talk about context. We swept this, we displaced down below the previous day high, which was marked out over here, right? This was previous day high. We came down below it. We tapped this fair value gap. It wasn't necessarily in discount, but it still held. Price was wanting to move up, right? We still had this little liquidity and some more liquidities up top over there. Had some fibs lining up with those. We never closed below it over here after opening up and during the New York session hours. Never came down below it or never held below it. So then we kept on rallying. Let's check out our 4 hour, right? 4 hour kind of retraced as well, left that wick, priced this next 4 hour candle, came down, took the opening price, and came up. This is something you will find in Shane's PDF file that we have here at our Discord. We talk about opening prices, closing prices, and how important all of those big levels are. You know, you can take it from any time frame and apply it to anything, any kind of chart. It will still be applicable to just in general markets. But as we continued to hold price up, right, you could have totally gone short, right? I was like a little bit short biased after we took this liquidity, couldn't hold above it, and that paid off. But there's a certain point where you need to know it's like, all right, if market is not willing to go lower, then I'm not going to trade it any lower. I'm going to stop here and I'm going to walk away. You could have, if you took shorts all the way over here, you could have had all of these price targets, right? You could have just exited your position right as we displace above this liquidity. You're still in profit, right? You're not letting your stuff get stopped out and completely invalidate your trade because you weren't wrong on it, right? You took this reversal. You were completely right for taking this reversal, right? It's just that price. Okay, we retraced. We held our bullish levels. All right, cool.
Lack of displacement down.
Further. Yeah, lack of, as Shane just said, lack of displacement down, right? You totally could have, right? Just context. Higher time frame was still wanting to go up. You had these wicks just all pointing up. Higher time frame, everything was holding. We didn't have big displacement on a higher time frame, right? It was just only lower time frame, which is completely fine, you know, taking these setups for 136. That's what I was doing today. I was feeling more comfortable taking these shorts off of these key levels than just pressing buy over here. That was just personal preference, right? Everybody kind of finds their way of trading and just stick with it.
Well, especially if you're taking higher, there's, like you see right on the chart, there's usually always some sort of pullback. And if you can capture that, that's all that matters.
Mm-hmm. Exactly.
If it's your risk, like I said the other day, your entry doesn't even have to be perfect. It just has to fit your system. That's all that matters.
If you define your setup and you know exactly what you're taking and it shows up, why aren't you taking it? Even if it's going against the general market trend, take that. Take your entry, take your setup. If you know it works for you, then let it work for you. And that's why we also stress the importance of journaling and the importance of backtesting, right? Like Shane was saying just now, you're on, by the way. It is very important to backtest those systems, right? To make sure that you feel confident in it, to make sure you know that it works, make sure you know the ins and outs of it. You know when it works, you know when it doesn't work. For me, I'm only looking for shorts when we are hitting major liquidities, right? Or during macros. Over here, we hit a macro, we're reversing. Cool. I took a short here. We hit another level over here. Let me show you, right? Here we hit 2618 during the macro. All right, that's a short for me. I don't care where the market is going, if it's going up or down. I'm taking a trade in the opposite direction in terms of reversal. Look how fast this trade was. I wasn't even like, boom. Within the next 5 or whatever, 15 minutes, right? I hit that instead of waiting for like a whole grind up, getting wicked out over here. All right, that's my system. And you can see kind of every macro, how we reverse, macro, reverse, macro, we go in the opposite direction. Just find a system that works for you and stick with it. Learn it, practice it, know every single in and out spot for it, and don't go system hopping. That is the biggest thing that kills traders, is system hopping. You see somebody, you have a good system, If you stuck with it, you probably would have been, learning so much, but you keep jumping from one to another, because somebody on whatever platform is claiming, oh my God, my 80% winning system, when your system is hitting 80% easily. Like
Yep.
every fucking day. You just have to know what days you need to trade and what days you don't need to trade. If your system doesn't present itself, don't fucking take a trade.
Back. And the other thing is, like we always talk about, is the not lying to yourself about risk and being prepared to take multiple losses in a row, because no one is perfect. Like we all go on losing streaks. It's proven. So you have to prepare for that at any time.
Right. If you have kind of with that risk calculator that we were talking about last night, and that you guys are more than welcome to check out, left link in the left corner right there, www.papertraders.io. You're able to check out the trade log. You're able to check out the risk calculator, which will help you tremendously in your trading. Check those out, both free tools in their testing trials right now. If you have any feedback, let us know. More than open for feedback. I'm taking anything in. But in that risk calculator, right, you are able to go in let's say your $150,000 account for for a prop firm, right? That has a set risk of $5,000. So technically, realistically, you're trading a $5,000 account. So what is your risk? Are you going to risk 1,000 per trade, which only allows you to take 5 trades, and then you're out of the game? Or are you going to take 10 trades at 500 risk, right? Which allows you more time in the market, allows you more time to make up. Or are you going to downsize to micros, right? You can take half a micro. That's going to be $25 or $250 worth of risk, right? If you're only taking 5 micros, that's half a contract. That gives you 20 trades that you can lose and stay in the game. Just kind of all just comes down to risk. So let us go back into here. Let me pull up that model that we were talking about. Shane, do you have it handy somewhere?
Yeah, it's in the models channel on the.
Okay, if we do, show them this.
Yeah, you have to screenshot it because it's too big to post on your chart.
So let's take a little screenshot of the model that we have. I'm going to post it right here. Whoop. Control V. Yeah, we don't need this. This is the model that we're looking at today. So we have our market either going to downside, going to upside, whichever one. Liquidity sweep, we displace up. Like we were saying, we formed that fair value gap, right? So now we're going from external liquidity, as mentioned yesterday, external. Now we're going to internal, which is over here, back to external liquidity, which is this now. Now we're going back to internal, which is our fair value gap right there, and we're going out of it. You can flip this picture and make it look like it's for downside, which I think I posted it somewhere, but it's just literally just that inverted picture. So let's look for those setups, right? They happen on any time frame. Just depends on how much are you willing to wait, how much are you willing to risk, things like that. So it actually did happen today.
I mean, that's what I took today.
During the overnight session. Yeah.
Yep.
So over here in the overnight session.
It happened again too, like right before 13 on your chart.
Get rid of these. So right, what do we have over here? Market kind of coming down. Boom. This is our liquidity sweep. What do we have over here? We have that fair value gap. All right. Hit the fair value gap and we just continue on. We have this over here. We had these liquidities. So everything over here, you could have, wherever you place your target, whether it be over here, whether it be over here, you had a defined model, you had a defined target, and you had a defined risk. Right? Like we said yesterday, you're trading from something to something. Whatever your target is, from this fair value gap to something, to this liquidity over here. Let me throw this long position on there. So this was your trade. wherever you enter, let's say we enter right at that liquidity. We take it up to here. What do we have? Almost 5R. So you're risking, if you got one contract, $350 to almost $1,500. More than $1,500, actually. That's your trade right there.
I sent it to you, a screenshot of it.
This is a trade that Mr. Shane took. Which if you guys, if you guys are not in the Discord, you're not following Shane, make sure you go and do that. Either come in here and couldn't paste. The image being pasted is way too large. Ah, boy. All right, let me take a screenshot of this. If you're not in the Discord, join up. It's $9.99 for a week. That's probably less than your caramel frappuccino from Starbucks. Or there's a monthly subscription as well, just $40 a month. If you go use Timmy's link, you're going to get 50% off. Big Timmy Hedge on Twitter. Check him out as well. Phenomenal trader in here. One of our top analysts along with Shane. And this was the trade that Shane actually took today, right? You can see his entry 22,132 and all the way to 22,175. And that's just off of that 1 minute liquidity sweep, off of that 1 minute order block. Change in state of delivery over here. Boom. Continue up, which we'll cover order blocks probably in the next session that we do, which I'll probably host one tomorrow. Not probably, we will host one tomorrow. Get a new little challenge going. So, right, this is a trade. That's your long entry. Got that. Let's go to a random day so that we're not like biased or anything. Let's zoom all the way out. Let's scroll somewhere over here so that it's not like what day are we looking at. Start over here. Cool. Right. We can do the same thing with the top. Right. It is going to be our boom, boom. Take the top, displace down, fair value gap, back down. Except we're just looking at it from a flip perspective. Where do we have a setup? We are on the 5 minute right now. If there's no setup, there's no trade, right? That's what I always like to tell myself. If I don't see a setup that's solid, I'm not taking it. We did sweep some liquidity over here, displaced up, retraced down into fair value gap, and kept going. That's necessarily not that solid. I'm going to see like a prime example right here. That's pretty decent, right? We took it up to a certain liquidity, right over here. Boom, go down, go up. We have this small little fair value gap, right? I mean, it's as small as it can be. We took this, right? You still would have gone up, take it up to this liquidity, boom. You don't need to aim for these highs or anything. You can take it to the lowest swing just to get used to that model working, of telling yourself, oh, I see it working. I know this model works. So why am I not going to take it, right? Boom. Low liquidity. You can, even if you're taking multiple contracts, right? Runners do a lot of work. And if, for those of you that have option trading, you know that. You can get whatever, 50% on majority of your position, close it out, leave some runners, and your runners are going to do a fantastic job of gaining those percentages. Your single runner can do as much gain as two contracts that you've sold at like 40%. Yeah, I mean, we do have this fair value gap. I'm sure we got an order block here in the 1 minute. So let's keep going. Sometimes it doesn't come right away, right? Like over here, swept right here, right? Sometimes it's not the prettiest, but got to take it if it's your model. Swept liquidity, fair value gap over here, retrace into here. Why is it fair value gap again? Because we're in discount, right? See how we rejected right at 50%? Price still went into discount, rejected from there. And we got another setup right there, right? We have this liquidity to the left. Cool. Down, sweep the liquidity. All right. Now we have a fair value gap. And now we have all of these liquidities up top. Could have taken it off right there. But why is it again? Stress the importance of that fair value. Where do we come down to? Retrace down to the discount range of it, right? You can even test some of these, right? You can even just go off the top of the candle if you don't like that this is still not in like all the way in discount. What do we have here? 1, 2, 3, little 3 drives. Take this liquidity, come down, form a fair value gap, displace these. Oh, okay. Well, I don't have a short setup over here, but wait, we have to wait for a retrace into discount. What do we do right there? And what do we have in discount right here? Boom, boom. Fair value gap, right? All right, cool. There's your trade. Look at that, all the way down to here. Guess what did price do? From external to internal to external over here, still to internal of this bigger range, back to internals. So now it wants to go down to externals or up to externals, whichever way, right? But since this is not in fair value yet, okay, cool. We're looking for shorts. Market has shifted over here. We'll talk about the importance of structure shifts as well on tomorrow's stream. Boom. Sweep all of these. We have some fair value gaps. I'm sure we got a little order block over here, but we have no discount. I think we covered this little setup over here, right? So, all right, we're waiting on discount. Wow, discount is all the way over here. What do we have right there? Fair value gap after taking out these. Come down. Now we have a big range over here too. We took out a liquidity over there, right? Displace down. Let's see this range. Swing high. Swing
100
low.
viewers is crazy.
Yeah, and how long have we been going for? 40 minutes. Yeah, that's pretty decent. That's insane, actually. Thank you guys so much for tuning in and watching. If you're finding value, please be sure to like and share and tune in for more. Spread the love, spread the joy. We love doing these. It helps us out, helps you out. And that's what we want to keep on doing. The more people we can help, the better. All right? Don't gatekeep this.
If you're going to spread something, spread the love.
Exactly. It's Valentine's Day. Spread the love, guys. So over here, yesterday, right? We come down. What are we looking at? We're looking for a short setup. This didn't quite reach into discount of this. Oh, keep going down. Oh, okay, cool. Now we're starting to retrace. We're not taking longs. What do we do? Retrace into this fair value gap in discount. Boom. Catch your trade right there. This is, let me make it a visual for y'all. Let me take this right there, put this right here. You could have sold it right there. You could have sold it all the way at the bottom, however long you want to hold. But you secured your trade. You traded your model, right? Cool. Keep going down. And this is also, I'm sure it lines up with OTU. We spoke about it a little bit yesterday, right? You don't necessarily have to have this whole thing just outlining your range, this scan box, right? You can just know, okay, this is the 50% line right here. Let me compress this a little bit so that you can see. So 50% over here, right? Above that, anything is discount, fair value gap, lining up with our 705, 618 trade. Cool. We're an OTE. We can take it to these targets. Look at how well this -1 lines up with this liquidity. Okay, where do we go from here? Do we have a 618 that lines up with the liquidity? Yes, we do. We can take our trade to here. If you have liquidities lining up with an important level on your standard deviation, you can bravely take that setup and take it to that level. So over here, 2618 lines up. Cool. Was this during macro? Was it 9:30? Okay, that's cool. It's during macro 8:30. Yeah, those 8:30 trades, those are solid too. The credit market open. If you find a setup, I can take it. So keep going. Don't have really a good liquidity sweep or like fair value gaps, anything over here. Keep going. You can always take an inverse fair value gap right there, but we're not getting into that yet. All right, here. Cool. Liquidity sweep. Didn't quite get to this one, but we had this nice little liquidity sweep. We have a fair value gap over here. But why did we just completely run through it? Stick a Gantt box to it because it's all the way in premium, right? You don't want to be shorting over here, or you don't want to be buying long over here. Market still wants to go down. Those warehouse buyers want to wait for their optimal trade. Look at this, 705 below the equilibrium of the range. So now we're in discount. 618, 705, 786, whatever line you take it off of, you can take a small position at 618, add at 705 if it goes there, add at 786 if it goes there, but define your risk properly. That's what matters most. And boom, we take it up to these highs. That's all you need. Which over here, all right, similar thing. We take this liquidity, we displace down. What do we have? A little fair value gap. We retest it multiple times. Keeps on holding. We don't break above it at any point. We keep selling. All right, boom. We could have taken this liquidity right there. What does price do over here? Take this liquidity right there. Right. Now we have our range. Define internals, external rated. We're going to go down through internals, external. Now we still have a fair value gap, right? We still want to short. Come into this fair value gap. Awesome. Sell back down. You can take this little manipulation leg that came up. Where do we hit? 705, 618. Cool. Continue down. Do we have anything that lines up 5, 6, 1, 8? Yep. Do we have anything that lines up with a 3, 5? Yep. -3, 2, 6, 1, 8. These levels 2, 5. Negative 2.125. Yes, we do. All of these retrace into this OTE, into this fair value gap, sell back down. Yeah, you can take this, but it's not like a huge liquidity sweep, right? We were still looking for downside. Let's keep going. Let's keep going. Do we have anything over here? No, this doesn't want to give us anything to the downside. Over here, actually, this is pretty decent. Took a little bit. Right, sweep those liquidities to the left. We have a little fair value gap right here. We hold this. I'm sure we hit an important level of 618. Right there, 618. Cool, you have your -1 lining up with this liquidity right here. Take your trade right to there. Give you a little visual of that. Define your risk. Your stop below that. Right there. 341 ratio. Do we have any fair value gaps right there? Yeah, we had a tiny little guy right here. Tiny but mighty, right? Those are often really good too. They change course real fast. If you guys also have any questions, feel free to put them in chat. I'll answer them to the best of my ability.
I have something fun.
Oh, yeah,
we can talk about quick. We're gonna do one lifetime subscription giveaway on Twitter. Just have to comment or repost and tag 2 friends. I'm just working on the post right now.
All right. Is that gonna be on the Paper Traders account?
Yep.
All right.
And it ends in 16 days. I should be up in 10 minutes.
You guys do need to be following the account.
That too.
Rules, yeah. Follow the rules, guys. Just as with trading, if you don't follow the rules, your entry is not going to count. I'm gonna check where Rob's FinTech is in here now too. You see that?
The real homie.
He joined up.
Super stoked about that. He's a super good coder, developer.
Let's go. Fucking solid. Guys, and make sure if you lock in your subscription now, your price is not going to change if prices do go up in the future, and they will. We continue on bringing on value to this community. We continue on developing. Once these trials are over for the risk calculator and the trade journal, they're going to be exclusive for members only. So you're not going to be able to access those afterwards. This is kind of a semi-decent setup. What do we do? Swept liquidity. This fair value gap would have been nice because this one is not in discount, right? This one's still in premium. So you can't take it, right? But it's kind of higher risk. So if you're not too confident in your setup, you can either not take it or you can have a downsize amount of contracts that you take for setups you're not confident in, but they still meet the criteria. Yeah, you can try it
That
out.
was me today.
Yeah.
Because I don't usually trade Fridays. I even posted like in futures because we were already up so high. We were so far away from any sort of discount. I said, sorry, I basically said we had a nice CSD, failed to displace above the highs that we put in yesterday. Like we could bounce out of OTE here, but the RR isn't favorable, not an A plus setup. But then like I posted like when we got that 1 minute CISD, I was like, here's the entry. Like I don't trade Fridays, so I took one single micro and took that like 300 ticks and it was like $100, which is totally fine. Size down, it was like a $50 loss if anything.
Yep.
And I thought it was reasonable and I wasn't gonna let a day decide if I took my system or not.
Exactly. Your trades should be defined by your setup, not the day. If a setup presents itself, by all means, take it because you want to feel confident in your system, right? I just have a rule that I'm not trading any half day. No matter whether or not my setup presents itself, I'm just like, cool, half day off of the market, I'll take it. Just because of how much time we already spend behind the computer screens, right? I'm not saying I hate it, but I'm just like, cool. I'm treating this like a job. If I don't have to work, I don't have to work.
Not trading is just as good as trading.
Mm-hmm.
Sometimes better.
Risk capital preservation.
Losing money is making money.
Mm-hmm. Exactly.
You.
That is what it's all about. Look at this. This right over here. We did not sweep many liquidities over here, but we still had a little rundown. Came back up. I just want to show you how important it is, right, to notice how the bodies are respecting this fair value gap. Look at that. Not a single body close on the 5-minute above this shielded us a nice short. Right, over here, we got our order block, but that's for later time. Swept liquidity. Same similar setup, but you're just using an order block for that. We'll cover those in the next session. See how we swept liquidities? We started displacing down, but we didn't have any fair value gaps that formed. So, okay, you are not looking for any shorts over here. Within this little range, you had a little retrace down into discount before price continued up. Have a fair value gap in discount right here. Bodies are respecting it. We continue up. Over here, liquidity swept, reversing the small fair value gap. Totally take it. That is probably the one setup that you will ever need without getting into technicals or, watching a lot of ICT, which I do still think that everybody should do because it will, it'll make you understand why price moves the way it does or why certain things are respected and others are not. But if you just have that setup and you master that setup, you will be set.
I think ICT even talks about that. Like he shows all the different methods and all the different imbalances and PD arrays, but he never said to use them all. Like you're not supposed to wear it all at the same time. If you are one of those people, I'm sorry. But yeah, you pick and choose the models that work for you. Like all I need is discount and my 1 minute model, and that's all I need.
Yeah.
I don't need anything else. I can use other things, but I don't need them. Whatever jumps out at you.
That's a funny analysis. Kids mix and match in fucking their closet, dude. They got the
tastefully.
yeah, yes, tastefully is right. Okay, over here, same thing, right? We're kind of going up, we're up, down, displays fair value gap, continue on down. Right? Could have even waited for it to just kind of confirm, have a little market structure shift, which probably would have happened over here on the 1 minute time frame if you're looking. Probably would have happened way sooner. But either way, we're looking at higher time frames now. Importance of mastering higher time frames is more important than mastering lower time frames. If you are great at finding setups on a higher time frame, you will have zero problems finding them on lower time frames.
Okay.
Just have to wait on those liquidity sweeps, and boom, you're golden there. Don't try to go and try to find a reversal point when you're just in the middle of fucking nowhere.
Yeah, and that's knife catching.
Mm-hmm.
That's not fun for anyone.
It's kind of like right here. Cool. Swept the liquidity of a small little fair value gap right there. This this London session. London session setups are also solid as fuck. London session probably respects fair value gaps and all the PD arrays the best. Like I've stayed up for probably a week or 2 weeks, and I would just trade London and Asian session. I found that London Asian session respect these concepts so well. Like you won't ever see it like wick through it a bunch of times. It's only like, look at this, market opens, right? And you're starting just manipulating so much through this liquidity. But over here, boom, it tapped in, it went up. It's fucking solid. So stay up, find some time, just test it out. Test it out. You will build so much confidence in your setup if you just trade it during London and Asian session. You will have, you'll have a lot more trust during the New York session doing those setups. Or if you're new to it, if you're new to it and you're kind of, scared of price a little bit unsure, don't trade New York session. Trade it with paper for a while so that you know how it moves, but trade your regular setup or your regular account during Asian or London session. It will save you a lot of headaches. But everybody needs to go through those trials and tribulations at the end of the day.
You get there on your own.
Yeah, exactly. Exactly.
No one can teach or tell you or you can't take the pain away, really.
Yeah, you can't. It's everybody wants to try something. Everybody wants to go against whatever somebody's teaching them or saying them.
Everyone wants to speed the process up.
It's just our human fucking nature. You can't take that away unless you're a fucking robot. Thank you guys for tuning in. I appreciate y'all. All 116 of you. Appreciate you. Thank you for being here. Give it a like, give it a share if you're enjoying this. If this is bringing you value, spread the value. I'll let other people in on this. We want to build this community. We want you to grow with us. We want you to learn from these. That's why I want to keep on doing these. Keep moving. What do we got? See, like sometimes you're just scrolling, nothing's jumping at you. It's like, so like other models come in handy, but you also don't want to mix them together. Like Shane was saying, you don't want to be wearing like Gucci shoes with, Levi jeans and the Prada purse and then a Psycho Bunny t-shirt. You look like a fucking dumbass. Pardon my French. And if that is you, more power to you, brother or sister. We love you for who you are. Spread the love. See, it's mainly happens at big liquidity sweeps, right? That's what we want to look for. So like over here, right? We swept that liquidity. Now we have this fair value gap right there. Boom, right in discount. Right there. Look at this. We retrace all the way in discount. We don't reject from the first half of this fair value gap, right? But reject above when it is in discount. Reject down. We got our liquidity right here. Cool, that's your trade. But RR might be a little, iffy, but hey, it's your model, right? Downsize on your risk. Take it to where you want it to go. Awesome, you're done. See from here, reversed up, but you're already out of your trade. You're not stressing. You're not worrying about it. You hit your target, you're out of the market. That is another important thing. Whenever you're trading and you're just starting out, build the confidence by finding the nearest target and just taking your trade to that. You will get to the point where you're taking ranges down, right? But build that confidence first of like, okay, my setup works. This is how the market runs. I'm taking it from this to this, from something to something. I'm done on the day. I'm closing the market down, right? I don't need to overstay my welcome. So over here, liquidity sweep, fair value gap, right? We're not longing out of this, which you can, but see how it comes back down. You have better RR here, a lot of liquidity up there too. Take all of that out. Over here, a little liquidity sweep. We haven't retraced into the internals of this range yet. We swept this liquidity. Okay, we displaced. We have a small little fair value gap right there on the 5-minute. Price comes into it, sells down. Awesome. That's all you need. You can even take this, right, for your targets. Have a 618, landing out with some stuff over here with a fair value gap and this blunt bottom. A candle, volume imbalance, whatever. Come down into it. Awesome. You sold at your target. You're done. Market's reversing now. You're not, over there just being scared. Going, what do we have over here? Another liquidity sweep. Right? It's never going to be this perfect little setup, or it might present itself as like a perfect little take this, retrace into it, go up, right? It's never. Sometimes it can be a little choppy. Sometimes
the ugliest things that work out to be the best trades too.
Look at that. We retrace, we hold this. Now price is going up. Gear session. Go up. Come down a little bit over here. Not necessarily liquidity sweep, but we see a little reversal starting to happen. We inverse this fair value gap. Okay, cool. We close all the way below it. Right? We retrace into this fair value gap. We sell down. Right? You have your defined risk. You have your small target. Price does continue going lower, but you don't care about that. You took your trade, defined target, defined risk. Awesome. That's all you need. I think that may be it for the day. We're right at that hour mark. Got 120 of y'all in here. If you got any questions, we'll open up the floor. We'll sit here chatting for a little bit. If no questions come up, we'll just send it out. But we appreciate you guys for tuning in, for enjoying this, spending your evening with us. Hope you have a great rest of your Valentine's Day. If you're not doing anything, backtest, journal, look over the market, test the setups that we just went over this live stream. Once it ends, you'll be able to rewatch it. We'll answer any questions that come up. Send me a direct message if you feel so necessary. Yeah, we'll happily answer. We want you guys to grow. Helps us help you guys. So let's spread the message. Giveaway. We're giving away a lifetime subscription to the Discord, right? It's a continuously evolving machine. You will have access to Trader Log for lifetime. You'll have access to the risk calculator for lifetime. Those are newly developed tools, and they're just going to keep on getting better and better and better. So make sure to check out that post. Follow the directions as they're presented to you. Directions are not followed. If one step is missed, your entry won't count. So make sure you're following those directions. If you've enjoyed this, if this gave you value or you learned something new, give it a like. Share it with somebody that might find this interesting. But yeah, other than that, don't see any questions. I hope you guys have a beautiful night, and thank you for watching. We'll see y'all tomorrow. Okay, bye-bye.